Welcome to Expert Real Estate Secrets, the show where real investors share real strategies that actually work. No fluff, just actionable tips to help you close more deals, make more money, and build lasting wealth. Let's get started.
Welcome back, everybody. This is Expert Real Estate Secrets with your host, Don DeRosa. Today, we're breaking out the foundation blocks every new investor needs. We're talking about the core strategies: wholesaling, flipping, rentals, and creative financing. So Mia, let's start right at the top, because folks are always asking wholesaling versus flipping. Which one do I start with?
Yeah, and if you're just tuning in for the first time, welcome. I'm Mia. Don, I get that question a lot too. People think those two strategies are the same, but they're really different animals, aren't they?
Absolutely. Let's break it down simply. Wholesaling is all about getting a property under contract, usually at a discount, and then assigning or selling that contract to another buyer for a fee. You're not fixing anything. You're not actually buying the house. You're just the deal maker in the middle. That's key. With flipping, on the other hand, you're actually buying the house, doing the work, painting, fixing, sometimes tearing the whole thing up, and then selling it for a profit once it looks brand new.
That's such a crucial difference. Wholesaling is typically a low-cost entry point, right? You don't need a pile of cash up front, and you can move pretty quickly if you've got hustle and a great buyer's list. Flipping, though, now you've got skin in the game. You need real capital, you're taking on some risk, but the profit potential is a lot bigger if things go right.
Exactly. Let me tell you, Mia, I'll never forget my first wholesale deal. I didn't have a lot of money, but I did have ambition. Found a distressed property, got it under contract for, I think it was $77,000, and then found a flipper, someone who wanted to do the renovation, and assigned it to him for $85,000. Made $8,000 without lifting a hammer. That's when it clicked. If you're good at marketing and negotiation, you really don't need deep pockets to get started.
I love that story, Don, because so many people get stuck thinking, I need 10 or 20 grand to even get in the door. But with wholesaling, it's really about hustle and understanding your local market. Just know, laws around wholesaling are changing in some places. So listeners, make sure you're staying legal and compliant before you jump in.
Yeah, great point, Mia. Compliance is critical. Now, with flipping, sure, the paydays can be big, but there are a lot more moving parts: rehab budgets, timelines, holding costs. I always say, leave yourself a 20-25% margin for the unexpected. The Murphy's Law of real estate: whatever can go wrong will try to.
Ha, so true. Flipping can be a fantastic wealth builder, but you gotta have systems, you need trusted contractors, and you've got to be super honest with your numbers. So there's your crash course on the two most popular strategies out there. Let's dig into the next piece: buy and hold rentals, which is a real favorite of mine. So, rentals. That's the bread and butter path to wealth for a lot of real estate folks. Buy and hold means you're purchasing a property and holding it for the long term, renting it out to tenants, earning monthly cash flow, while your equity grows in the background. Don, would you say this is where people start thinking long-term instead of just chasing checks?
Exactly, Mia. With buy and hold, your tenants pay down your mortgage for you while your property typically appreciates. There are all these built-in benefits: steady cash flow, tax write-offs, depreciation, a whole bunch of wins. But of course, there are headaches. You might get a bad tenant or face vacancies, and trust me, when you're chasing down rent or fixing a leaky pipe on a Sunday night, it doesn't always feel like passive income.
Late night emergencies. That's the reality check. But the payoff can be huge if you stick with it. I worked with this single mom last year. She was nervous, didn't think she could actually buy a place, but we found her a small duplex with minimal cash up front, thanks to a good loan structure. Not only did she have a safe home for her kids, but the rental income from one unit basically covered her payment. Now she's building equity every month and has a real shot at generational wealth. That's what I love about rentals.
Yeah, and you see that time and again. Buy at $200,000, rent for $2,000 a month. Expenses come to $1,500, so you net $500 plus the principal pay down. Do that over and over, and suddenly you're living off rental cash flow. Like we talked about in our Burr episode, not overnight riches, definitely more of a marathon, but wow, it adds up.
Absolutely. Just keep in mind, it's not always glamorous, and you've got to be ready for occasional curveballs. Still, if you want real long-term security, buy and hold is hard to beat. All right, Don, creative financing time. This is your playground, so have at it.
All right, now we get into the stuff most folks never hear about, creative financing. There are so many ways to get into a property without a ton of cash or perfect credit. The main flavors here are subject to, lease options, and owner financing. That means you're controlling the property instead of straight up buying the traditional way. For instance, subject to is when you take control of a property and its payments, but the loan stays in the seller's name. Maybe a seller's behind on payments and needs help fast. You can step in, take over those payments, keep the loan in place, and then rent out the home for cash flow. You just solved a massive headache for them and picked up a house yourself for next to nothing down.
That's such an important approach, and honestly, it's overwhelming for a lot of new folks. So Don, what kind of contracts or paperwork are we actually talking about here? How do you protect everyone involved, especially if you're new and maybe feeling a little out of your depth?
Great question, Mia, and I get it constantly. First rule, never wing it. You need contracts that are detailed and specifically designed for creative deals, like a proper purchase and sale agreement with subject to or lease option clauses. And you absolutely must have a knowledgeable attorney, especially early on. I always say protect yourself and the seller. If something goes sideways, you want that paper trail and legal backup. If you're starting out, find a seasoned mentor, get in the right networks, maybe even shadow a few deals before jumping in. Start small, start smart, and don't be afraid to ask lots of questions.
Love that. Ask the dumb questions before you're in deep. And the thing is, creative financing isn't just about sneaky ways to avoid banks. It's about making win-win solutions the banks don't offer, like helping someone avoid foreclosure or letting a seller move on without wrecking their credit. It's problem solving, not just chasing deals.
Couldn't have said it better. And if you do this right, it becomes the secret sauce for building your portfolio a lot quicker. But you do have to respect the process and make sure you're learning as you go. That brings up something we haven't touched on yet, the market itself. All these strategies work, but the market can really change what's best at any given time. So let's turn it to the market. Whether you're just getting started or scaling up, the first thing is to read your local conditions. What's moving in your market? Are home prices climbing, or is inventory piling up? Pay attention, because what works great in a hot market, like wholesaling or flipping, might be tougher when things cool off. But if rentals are in demand, maybe that's your signal to go buy and hold for steady cash flow. Bigger than that, though, is setting clear goals. If you don't know what you're aiming for, it's real easy to get scattered and try every shiny new strategy all at once. Know your risk tolerance, your resources, your timeline. Write it down and use it to choose where to focus first.
Definitely. And I'd add, don't be afraid to start simple and then branch out as you learn. The most successful investors I see have a core strategy. They work until they're really, really good at it, and then they layer in new ones. Diversification matters, sure, but don't diversify yourself into confusion. Get focused, stay flexible, and your plan can evolve as you do.
That's a great point, Mia. People think strategy is about picking one thing forever, but really, it's about knowing how and when to adapt based on what the market's offering you and what you want in the long term. Set measurable goals, evaluate them regularly, and be ready to pivot when the market gives you new opportunities. Speaking of that, let's talk about building out that first investment portfolio.
All right, if you're ready to pull the trigger, you've got to figure out where you want to start based on what you actually have, whether that's time, money, or experience. Maybe wholesaling is your entry point to stack up some cash, or maybe you're looking at a small rental for long-term growth. Either way, have specific goals. I want 2 rentals this year, or I need to hit $20,000 from assignments in 6 months. Deadlines are huge, or you just end up spinning your wheels.
Exactly. And as you stack those little wins, you can expand your strategy. Maybe after a couple wholesales, you try flipping your own first property. Or once you're comfortable with a rental, maybe you read into creative financing so you grow without draining your savings. Diversify across these approaches. You balance risk and you give yourself more ways to win. The slow and steady game is powerful, especially when you compound it over the years.
And the best portfolios I see are built in stages, not as giant leaps. Just like building anything else, layer it out, check in often, and be honest about what's working or not. And that actually leads right into something we preach all the time. Build your team and keep learning. Nobody does this alone. If you take nothing else from this episode, let it be this. You need other people to succeed in real estate. Build relationships with real estate agents, lenders, attorneys, contractors, property managers, even other investors. That's your safety net and your launch pad. And sure, go to local REIA meetings, seminars, or even online forums. That's where you find those people and pick up tips you'd never get from just watching YouTube videos all day.
Mia's spot on. And your education doesn't stop after your first deal. Keep learning. Subscriptions to trade magazines, podcasts like this one, hey, shameless plug, and formal courses all help you see trends early and avoid expensive mistakes. I mean, the market shifts all the time. You need to be constantly updating your knowledge if you want to stay ahead of the curve.
Absolutely, Don. And don't wait until you feel ready. Immerse yourself early. Ask questions. Shadow someone who's been through a cycle or two. That compounding of knowledge really pays off when you're staring at your first complicated deal, trust me. All right, so you've got your basic strategies, you've set goals, and started building your network. What's next? Time for action.
Now it's roll up your sleeves time. Whatever approach you picked, you need to map out your steps. Property search, financing, due diligence, all the way to property management. Actually put it in writing. What's the next action you need to take? Not in your head, but on paper or your phone. Set real timelines. When are you making your first offer? When's your first close? How often will you review your progress? That's how you build up momentum. You can't just leave it to chance.
Yeah, and keep a scoreboard as you go. It sounds cheesy, but checking off wins or catching early mistakes keeps you motivated. Remember to check back in on market conditions and your own portfolio's performance too. Is your rental still pulling in cash flow? Are your flips taking longer than planned? Don't just run full speed ahead. Check, adjust, then keep building. One milestone after another, that's how people actually scale up in this business.
Couldn't agree more. The most successful investors I know work in cycles, plan, execute, measure, adjust. Keeps you honest and always heading in the right direction. Once you've got some properties under your belt, the real trick is to manage that portfolio so you're not just growing, but thriving. All right, to wrap it up, once you've got properties, you're in the business of constant review. Check your numbers every month, rental income, expenses, maintenance, cash flow. If something's trending the wrong way, you want to catch it early. Regular property inspections help avoid the big, expensive surprises. Stay on top of maintenance. That'll protect your assets and your sanity.
It's way easier to fix a small leak than a giant flood, trust me. And as your income grows, be intentional about where the profits go. Maybe you're using a refi on one rental to buy another, or looking into emerging markets for new opportunities. Reinvesting and scaling with intention can really move the needle over time. Just don't get complacent because things seem easy for a few months.
So true. Real estate is a long game. Keep reviewing, keep learning, and always keep your eyes open for what's next. And hey, if you want to dive deeper, especially into creative deals, check out our coaching and resources at expertrealestatecoaching.com. Mia, any parting shots for today?
Just that there's no magical best path. It all depends on you, your goals, your lifestyle. Start where you are. Don't try to learn it all overnight, and surround yourself with smart, supportive people. Every win and loss teaches you something new. Just keep going and keep growing.
Couldn't have said it better. Thanks for tuning in, everyone. Make sure to subscribe, leave us a review if this helped, and share this with anybody in your life who's looking to start investing. Mia, always a pleasure talking shop with you.
Same to you, Don. Thanks, everyone. See you next time.
That's it for today on Expert Real Estate Secrets. If you're ready for hands-on coaching and real results, go to www.expertrealestatecoaching.com right now. Join the community, get the tools, and start closing more deals. We'll see you on the next episode.